Welcome, dear traders, it's me, Kate Stichina, and you're watching a recap of the Asian session. On a Monday morning, traders were rather cautious. In Australia, financial services companies offset the losses of the energy sector. For this reason, the main stock index remained almost unchanged. Japanese stock indexes dropped due to a fall in the tech shares. However, the New Zealand stock index logged the worst result, declining by about 1%. This week, the US will unveil a batch of crucial economic reports. Apart from that, the Fed meeting minutes are on tap. The sentiment in the stock and the forex markets is mainly impacted by the results of yesterday's closing. The US stock indexes closed mixed last Friday, while US Treasuries managed to retain an upward movement. The yields of a 10-year and a 2-year bonds hit levels unseen since November last year. They gained luster with the investors amid expectations of stubbornly high inflation and aggressive rate hikes. Pessimism was also fueled by hawkish comments of Fed policymakers. For example, Cleveland Fed President Loretta Mester said that she saw a compelling case for rolling out another 50 basis point rate hike, and St. Louis Fed President James Bullard also admitted such a likelihood. The sentiment in the Asia-Pacific region was even more bearish due to geopolitical tensions. Last week, traders were worried about the conflict between the United States and China, triggered by a surveillance balloon. Not long ago, North Korea launched a long-range ballistic missile into the sea of Japan's west coast. On the top of that, there was a meeting of the UN Secretary Council on this issue and joint exercises between South Korea and the US military. New Zealand is dealing with the consequences of a cyclone Gabrielle, which raged through the country last week. Against this background, investors abandoned risky assets, including some currencies. Although the stock and the bond markets are closed today, the US dollar is rising amid hawkish speeches of Fed policymakers and rapidly growing US government bonds. The US dollar index approached a 6-week high. In the morning, it was trading at a high of 104 points versus its main rivals. However, the greenback failed to consolidate at this level. Traders expected the Fed to raise the rate by only 25 basis points in March. The ECB could hike the key rate by 50 basis points at its next meeting. This is bearish for the US dollar. Notably, the ECB's interest rate is still 200 points lower compared to the Fed, and the euro takes 57% of the currency basket. The US dollar was unable to assert strength versus the euro despite the Fed's hawkish rhetoric and the growing treasuries. It decreased to 103 points. However, in the Asian session, it was trading in the upward range of 103.00 and 104.10. The yen managed to climb amid a mixed dynamic of the greenback and renewed hopes for possible changes in the Bank of Japan's monetary policy. The next Bank of Japan meeting will be held on March 10. Haruhiko Kuroda will not step down at this time, so he may surprise markets with an unexpected decision before leaving the post. His successor, Kutsuyo Ueda, will speak at the confirmation hearing on February 24. Investors are sure to take notice of his words. However, Japanese politicians are not prone to sharp changes. This is why the monetary policy stance may remain the same for a while, despite a new leadership. For this reason, the yen was rather volatile in the morning, and the dollar-yen pair tested the 134 level. Shortly after, the bulls pushed it to 134.30. If the pair breaks through the resistance level of 134.77, it will facilitate the bullish sentiment. As the US dollar was trying really hard to rise higher, the yen kept dropping in the Asian trade. The dollar-yen pair was moving in the bullish channel of 133.90 and 134.50. Commodity currencies also received some support. The Australian dollar managed to rebound from the support level of 0.6863 and touched 0.6897. Despite the cautious sentiment, it advanced to meet China's cash injections into the economy. The People's Bank of China has kept its one-year loan prime rate at a historic low for the 6 months straight. The regulator also made new injections into the market to boost the yuan. It means that the Australian dollar could grow as well. The Aussie managed to withstand the US dollar pressure. The AUD USD pair was moving in the range of 0.6862 and 0.6916. Moreover, it's likely to grow higher. According to forecast, over the next few weeks, it may approach 0.7200 and probably reach new highs. The New Zealand dollar lacked any positive drivers, and the Kiwi dollar pair fell to 0.6194, the lowest level since early January. The Reserve Bank of New Zealand will announce its rate decision on Wednesday. However, it might be impacted by Cyclone Gabrielle. The need of aggressive tightening is not as great as it used to be. Policymakers should be really careful when making decisions given the devastating consequences of the hurricane over the past 3 weeks. Therefore, the regulator could stop monetary tightening. If so, the pair may slide to 0.6234. In the morning, it was trading in the bearish corridor of 0.6227 and 0.6255. New Zealand Finance Minister Grant Robertson said that the central bank is responsible for capping inflation, and this is why the Kiwi is volatile. However, it's weaker than the US dollar. And that's all for now. Stay tuned with us and see you soon.